Hello my dear listeners, this is going to be a silver follow-up on my prediction $100+ price for this year. And first thing I would like to say about this, that no one can predict the exact price. Okay, there's no possibility, because you have to know what the holders of the US bonds will, how the Chinese will react, how the Japanese will react, how the Saudi Arabian will react, if the oil market will accept the US dollar as a payment for oil. Are we going to see the day of rage in Saudi Arabia on March 11th? What the oil price can be that day? This is going to be $120 oil. Maybe the silver will be $50 that day, and the next day it's going to be 100, and then next week it's going to be 500, and you're going to see the dollar collapse at this point. So I'm just saying these things right now, so people understand that when I start to predict in the $100 silver in 6 October of 2010, I said that we are in a currency crisis, and I think we are in hyperinflation. And if everything remains in change, like we don't have any accelerating factor entering into play, I predicted that's the minimum price of silver will be probably around $100. I might pull back to 84, but that's my sentiment based on the fundamentals of the hyperinflation, how it works. So other thing I would like to mention, that I was listening, everybody is expecting the COMEX default in March. It's not going to happen. But I think it's not going to happen, because my understanding that the holders of the paper silver, they don't want a paper market to be bankrupt. I don't see any advantage for the paper silver holders to bankrupt. And if we agree that there is about 100 times more paper silver holders than in terms of money than the physical silver, so the interest is not there to bankrupt the paper market. They will try to exit, and they will try to sell their paper silver and buy maybe some other assets, maybe buy some agricultural stocks, maybe buy whatever other paper assets or tangible assets. But there is no interest to bankrupt the paper market, like many people think, because you're gonna shoot yourself in the foot. You're not gonna make any money by doing this. And when I talk also about the physical squeeze, it's something really important I forgot to mention. It's a commercial demand. According to Eric Sprott, commercial demand grew 18% last year. Okay, and in the silver market, the commercial demand is still the biggest part of the market. And something that I want to remind you, going on Jim, my local friend channel, he make a video about the nickel market collapse in 2006, because the commercial stepped in and they start asking for delivery, and there was not enough in the vaults. And then you can see what happened and that platform or that exchange was closed. Okay, it was happening in 2006, and you can make an analogy what's going to happen with the silver, and you can see that price of nickel triple or quadruple, and then it go back to a ridiculously low level after that. So commercials play a major role in this, because if I'm producing something that the cost of silver it's a 1% of my production of the item, I'm not going to risk to run out of silver to stop my production. I will try to grab as much silver from the market as I can to prevent that to happen. So it's really simple logic. And I think we are so much focused on the investor demand, because investor demand, yes, you can manipulate, you can move the price higher. And investment silver, some people will put some of their silver back into this market, but remember, the commercials, they will be the most affected by the physical squeeze, not the investors. And there is much more in commercial silver out there than in investing silver. And we now back to the investor price. my sentiment that the price has to be much higher than $100 to see significant amount be put back into the market by the smart investor. And I think the not smart investor, they already, most of them, they already sold the biggest proportion of their silver. So there is not much will be coming back at $50, $60, $70, $40. Okay, it's going to be much higher than that. Now, quick prediction for the next week. I think we're not gonna see the money yet the next week. Okay, if we see $40, which is not, I don't give a high probability that to happen, we will see the big correction down. Most likely we're gonna see $37. If it's not gonna hold at 37, or I think we may have 37 and pull back 5-8% from that price. If we will have 10-15% pull back from that price, there is less possible. I think more possible 37 and 5-8%, and trading back around 37 level for the next week. So that's, and now I'm just gonna show you a really important thing here, okay, about oil. This is the article that appeared today. This is a Russian, this is one of the mainstream Russian newspaper, and they are saying that, okay, Barack Obama received a request from many senators to start making the strategic oil reserve available back to the market. And there is a, okay, there is a, to the Reuters, there is chief of the Obama administration, ex-director of the JP Morgan Chase, William Daley, said that they are looking at the possibility to make these reserves available. Okay, that means that the United States, in the case of the national emergency of the $105 barrel oil, okay, and I don't think if they have 727 million barrels. Sorry, the article is in Russian. Okay, 700 million barrels in the reserves, but I don't think, I'm not sure if that's going to last very long. First of thing, and the other thing, if that news is released in the market, I don't think this will be might have opposite effect, and the price may go up instead of going down. But you can see that there's already a state of emergency in the economy. So think how it can affect the market just moving forward. So now I'm just gonna go real quick. So for the March, to follow this 11.8% per month increase, we should be at $40, but we're just 1 month behind. Okay, 35.93. So we just, you know, I think we're gonna be back on schedule. Okay, you see April 44.91, and May, I think May about June, we're going to be back on schedule on this curve of 11.8% average increase. Okay, and I established this price. Remember what I said, it means that the dollar still remain. When I start to seriously doubt that it's going to be possible, since what's going on with the oil, it's a major component. You have to start following oil closely to guess the price of silver, because it's all inflation related. And when I said, okay, I said the fair price, we should go back to the fair price, and I said fair price of gold should be about 3,500. I divide this by 20 or by 40. Okay, so I get 175 and 87.5. So I set it in between that price, and that's how I established the fair price of silver. And I said we're going to correct back to the fair price of silver. Now, lately, what I was saying, remember in my last silver video, I said this move. So we might see $100 silver and then pull back about 84 in trade around there. But you know, that's all these things. Okay, it just confirmed that we're in hyperinflation, we're in a currency crisis, we're in a, like, we are minutes, days and weeks before the dollar will collapse, and then you will not be even forget 120. It's maybe going to be 12,000. Okay, because you see there is already a big numbers on the internet, much bigger. So this is only scenario if the dollar still remain, which is I start doubt seriously that it's going to be holding through this year. Anyways, that being said, 35 really good price, really good price, really good price. If you don't agree, please write about this in the comments. I would like to hear your argument. Thanks for watching.